Welcome back, everyone, to another episode of Passive Investor Tips. I'm your host, Travis Watts. In today's episode, what we're talking about is syndication investing right for you? How to know, how to find out. And I want to give you these 3 steps that I designed for myself years ago, which allow me today to realize, or recognize rather, if an investment is right for me at this given point in time. Disclaimers as always, never financial advice, not telling you or anyone what to do with your money, for educational and informational purposes only. And we're going to do something a little bit different. I'm going to actually I'm going to do a little PowerPoint presentation for you. For those tuning in on YouTube, by the way, all these episodes are posted on YouTube. You can go to Best Ever CRE in the search and then find Passive Investor Tips, and you'll see all these episodes on video. So I'm going to go ahead and pull up my screen for you and share it here. You'll see the 3-step process in front of you. What this 3-step process is number 1, you need to know your goals. So we're going to look at a few examples of goals. Then you need to know, what do you value? And then you need to look at the investment at hand and decide if that matches or aligns with your goals and values. So let's break that down. Let's start with goals. And when I say goals, by the way, I'm talking about personal goals, not financial goals. Most people have financial goals. Set those aside for a minute. Think about things like, do you want more free time in your life? Do you want the ability to travel more? Do you want to be more charitable? Do you want to upgrade your lifestyle from where it's at currently? Do you want to reduce stress? Do you want to have more flexibility? Do you want to have security and stability? Now, this is by no means an all-inclusive list. This is just a few examples of different goals that people have. So I'm going to walk you through this as I would walk through it myself. And I'm going to start by highlighting my top 3 of my goals. Now, for me, it's travel, always has been travel. My wife and I, and now our son, we all love to travel. Number 2 is reducing stress. I used to have a lot of stress in my life with the jobs I did and managing single family homes. And then security and stability is a big reason why we're in the game of being investors. So switching gears real quick, we're going to circle back to that in a minute. What do you value? Now, when I talk about values, now we are talking about the financial side of values, things like wealth preservation, wanting to hold on to what you've built and created. Equity growth, which is the appreciation in investments, buy low, sell high. Passive income generation on a monthly or quarterly basis. Retirement, financial independence, minimizing risk, tax efficiency, liquidity. We all have different values. So again, I'm going to go through this like I would on my own. And I'm going to say, for me, wealth preservation is probably number 1. I don't want to lose what I've already built and created. Passive income generation, as many of you know, I live on passive income, so that's very important to me also. And tax efficiency, allowing my investment dollars to move quicker, faster, and more efficiently. So if we look at a real estate private placement or a syndication, this is a quick visual to articulate what that is and how it works. That's you or I at the top, front and center. We're a limited partner or hands-off investor. We're investing our personal capital into commercial real estate. In this example, multifamily properties. That could be in a private placement fund. That could be an individual deal offering. You have a general partner or general partners who are managing these properties on behalf of you and the other investors. They're finding the properties, underwriting them, they're raising capital for them, they're the asset manager, they're going to make sure the property management's doing their job, the construction crews are doing their job. Their ultimate goal is to increase the rent and revenue on the property and limit or cut expenses. And then they're sharing in the profits with you and I. So they're making the monthly cash flow distributions to you and I. They're passing along the applicable tax advantages and then any potential equity upside in the deals. It's a pooling of capital with a bunch of people to buy larger real estate, simply put. So let's take a look at this now. Does that type of investment align first with my goals? Let's start there. So my first goal, as I mentioned, was travel. So a syndication or a private placement is a hands-off investment. I don't need to find the properties. I don't need to show up to closings. I don't need to manage tenants. I don't need to make any active decisions. So that allows me more time for travel. So yes, that does encapsulate that goal. Number two, no managing tenants. I manage my own residential real estate for 6.5 years, and it built up a lot of stress and anxiety in my life. And so less stress is one of my goals nowadays, and this absolutely delivers on that. Number three, apartments provide an essential need for people. So this ties back to security and stability. I'm investing in something real, tangible. I can touch it, feel it, see it. I can visit it. And it's serving an essential need that's in high demand these days, and that is an affordable place for people to live. Now let's move on to my values. So wealth preservation was one of my top values. So the fact that I am investing in a tangible asset that I just described gives me that level of wealth preservation. I'm actually parking my money into a vehicle that's in high demand and is absolutely essential for Americans. So there's never a promise or guarantee. This isn't to suggest you can't lose money or anything like that, but I feel a lot better investing in something essential than something that is discretionary for people. Cash flow. I only invest in cash flow real estate. That in turn provides passive income, which was my second value. Depreciation, 1031s, bonus depreciation, the write-offs you get on a K-1 tax form. This is a tax-favored asset class, which allows my capital to move quicker and more efficiently and compound faster. Now, so you can see, bottom line, a syndication absolutely delivers on my goals and my values, but it's not without risk and it's not without its cons. So let's cover the cons really fast. First con would be less control. When you are a limited partner, you are giving up control essentially to the general partner or the general partners. You're hoping they'll manage the business plan effectively, efficiently, and on time as discussed, and that they have a track record in doing that. So this is how I overcame that obstacle. I thought it's no different than stocks, by the way. You're relinquishing control because you don't have direct control over companies that you own, right? You're going to be a hands-off investor, and you're going to go into, let's say, the S&P 500, the 500 biggest companies in America, and you're going to give control over to their CEO and their board of directors, and hopefully they can manage the business plan on your behalf. So if you look at track record of a syndicator, this is probably the number one metric that you could look at as an LP. Again, never a promise or guarantee, but it shows you the results. Have you done this before? If so, how many times? How successful were you? Have you ever lost investor capital? On and on. So I just show you right here an example of Ashcroft Capital's track record, which is a group I've been investing with for many, many years, just as one example. 26 deals, full cycle through the business plan, 25.6% annualized cash on cash returns, historically speaking. So a very positive track record in that example. You can plug in your own metrics, your own firm's example, the deal that you're looking at specifically. So back to the cons, the second one is interest rate risk. All real estate, this is a risk factor, okay? But the last couple deals that I've invested in and that Ashcroft has bought, we bought at about a 25% discount relative to previous pricing in previous years. Now, this pretty much had 100% to do with the fact that interest rates went up. So when interest rates go aggressively up, like we've seen in the last 18 to 24 months, pricing usually softens or comes down. So that's why we're buying the dip and getting these deals on sale. And additionally, we negotiated a $1 million further discount because we bought two deals from the same seller. Just a little tidbit there. The last one is local market risk. Markets matter a lot. Who ultimately is going to be renting your apartment, and can they afford that rent, and are there enough jobs in the immediate market? So I'll pull a quick case study of one market I invest in and Ashcroft invest in, and that's Sarasota, Florida. So if you look at the population growth since 2020, it's been 4.2% compared to a national average of 0.4%. So substantially higher. The 10-year average unemployment rate's only 3.1% compared to the national average of 4.1%. And the 5-year total projected population growth has been 13.1%, which is outstanding compared to the national average of 0.5%. And the last thing that I look at commonly is the job growth. And in the case of Sarasota, the 12-month total job growth in 2022 is 3% compared to a national average of 0.7. So again, this is just overcoming an obstacle. Every investment you make, no matter what it is going to have pros and cons. And so when it comes to the cons, you just have to understand how you can overcome those. And then again, the most important part, making sure that the investment matches and aligns with your goals and your values. So at this point, I don't normally do this on these episodes, but I want to put my calendar link out there for you. There's a QR code on the screen if you're tuning in visually on YouTube. And if not, you can go to calendly.com, calendly.com/Travis Watts, or visit ashcroftcapital.com/Travis, and you'll find my calendar. And what I want to do for you is I want to walk you through your own 3-step analysis. It's one thing to be listening to this episode passively and thinking about this in your head. It's quite another to sit down on paper, write these things out, and then have this as your foundation. This is not an upsell. I don't have anything to sell you, but I'm happy to walk you through this scenario because it is that impactful and it has made such a difference in my life. Additionally, you can always reach out on social media, Travis Watts or at Passive Investor Tips on Instagram and Facebook. I'd be happy to set up a call or Zoom with you anytime, or we can go back and forth over email if that's your preferred method. I just want to get this in your hands to help you better your chances of success along your journey. You're listening to Passive Investor Tips. I'm your host, Travis Watts. I appreciate you going through this presentation with me today. Have a best ever week, everyone, and we'll see you on the next episode.